Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So another thing that I take into consideration is when does the market have its best bang for its buck? And I know because we're in this computer age world now and we're getting faster and faster and we're more and more instant gratification, and I know that about you as my audience, as my competitors, and as my students. I know this about all of us because we're all trying to get faster and faster, and we all want to make our money tomorrow rather than making the market actually work for us and understanding when the times the market's going to move, but also understanding what that risk is involved and what is a realistic objective in mind as well too, and is it reaching those objectives. So a few things that I do know is that when people get to work, and I knew this in my 9-to-5 life before trading, and I knew this in my trading world, where the first couple hours of the day that's when everybody's ready and active to go. Those are on all these, the main reports are being released, and there's going to be some volatility in the market. So I'm very interested in the markets in those first couple hours of the U.S. session. I changed this to Eastern time, so hopefully I didn't put any typos in there. I live on Pacific time. I come from Central time, so I'm very aware of the different time zones that go on, and for some of you overseas, you have to adjust to that as well. But I play the U.S. hours. I play the U.S. session, those types of things. But I know in those first 2-3 hours of the day, I can expect and want some of the markets to be telling me what I want it to be telling me. And then midday, well, besides the FOMC, the market, that's the only time where the market's going to find some high energy potential, or the equity markets, they're really the only game in town because the currencies start to close in futures in Chicago and those types of things. So you get a feel for those first couple hours. But how about in Asia? If you're doing this part-time, or you're just putting on positions that you hold on to for a couple days, a week, a month, or things like that, where you want to be aware of when the market may have its most potential to move. And so those markets in that Asia session from 5 p.m. maybe to 8 p.m. or in that pocket of time that we might move on. I know it's probably a little bit later. I don't know if I have this fully adjusted to Eastern time, but for me it's 4 to 6 p.m. Pacific time, so that would be more like 7 to 9 p.m. Your time being a little bit more is 7 to 10 p.m. Eastern time. But that would be like for currencies like the yen, the Aussie, the New Zealand, the Euro yen, things that have to do with that potential, or those markets, or that geographical location waking up. Or the European session from like midnight to 3 or 1 to 4 in the morning type of idea, where there's definitely high energy potential. So these are all factors that come in from there. So I just know that the market can move. And I know even as option traders with volatility and with gamma and delta and those types of things, where I don't pay attention to those all the time, but the underlying, but I do know that you have to pay attention to it because that's going to affect how long and the time decay of your trade that's going on. So it's definitely going to be an influencing factor and make you want to adjust, because anytime the market moves, it makes everybody at some point squirm in their seat. So you have to begin to calculate your risk tolerance. And one of the basic things that I do that I still have done, I have an idea of how far my market's going to move in a day, or move during the time that I'm in the trade. That becomes the point. How long do you hold on to trades? So if I asked out there, how long are you normally in trades in an idea, how long is that? Is it a moment? I know with option traders and things of that nature, you're holding on to things for maybe days or weeks, or you're adjusting things. But what's your time horizon? Do you have an idea of how long that it takes to wait for the market to come to the area that you want, how long it takes to develop into the objective that you're looking for? Do you have a feel for that? And you could answer that if you want and say that from a 0 to 10 rating of how you feel in terms of your confidence and having some strong idea of that. You could do that, but if not, you're not going to put it in. Just think about it and prepare for that, because I know that when I was on the trading floor, sometimes I'd be in trade for a couple seconds or a minute or two because we paid for that edge. But the new edge now is looking and scanning through a market that is set up properly for your trade, not trading just one market all the time, because one market isn't always set up in a high percentage opportunity. So that forced me to figure out a new edge, which my new edge was have a game plan set for multiple markets. I look through 8 currency pairs right now, being the Euro Yen, I look at the US Yen, I look at the US Swiss, I look at the Pound, I look at the New Zealand, I look at the Euro Yen, the New Zealand US, and the US Canadian. And I've scanned through those 8 markets. And I picked 1 or 2 or maybe 3 of the best. And today, what popped out in my head and was set up the way I wanted to was the New Zealand. I had a pullback that I wanted to. The Aussie came up a little bit short, and the Canadian came down where I was bearish to New Zealand, bearish to Aussie, and I was bullish to Canadian. And from that point, but I'm going to show you an example of a Euro trade that was done, or the idea that I looked through. But one of the first things you do, high minus low. How far does your market move in a 24-hour session? And if you put on a one lot, you bought the high and sold the low, or you sold the low and bought the high type of thing, what's that risk out to you? And I know from there, you have in option strategies, it's a bit different in terms of that, but you still have an idea of what you're risking and what it's costing you. And is it basically, are you hedged on the idea, or are you vulnerable? Are you selling options, or are you buying options? Types of things where you know your risk, or you have unlimited risk type thoughts. So, but the point is you know what you're putting up, and you have to be comfortable with that to a point where worst case scenario hits, you know what to do, because these are all things that influence us throughout and give us that idea of confidence, or give us that idea of fear, or give us that idea of greed that is in all of us. So the point is keeping yourself to a point where you can make decisions clearly, or as clearly as possible, in an emotional game, which this is. When you're dealing directly with money like this, there's no ifs, ands, or buts about it. It is emotional. And you need to see how you act in an emotional state. So high minus low is I very much have a good, strong idea, give myself a 10 rating of how far I think the market can move. And when it's an eye-popping moment, or when it's just a ho-hum type of moment. One thing I do beyond that, once I have an idea of my risk, have an idea of what I want to trade, what I'm up against, now I have to time the idea, and I develop a feel for this price direction where, as I know something, a very simple formula, a high plus low divided by 2 gives me a current day. Who's winning the action? Who's supporting that action? And the point is which side do I want to play? And is it in agreement with the fundamental news that's out there? And the direction, is it set up timely? So the point is, it's just like anything in all competitions, it's divided into, we have an objective of where we think the market can go to, maybe to a high or an objective low, and we have the midpoint. I look at this like a football field. I was a college football player myself, so the point is that I see the market trading ranges just like that. And the point is that it gives you a sense of who's winning the action. And when we're in the top half of the field, the buyers are winning. And we're in the bottom half of the field, the sellers are winning. It's giving me an idea. And whether you're a day trader or you hold on to things for weeks, months, years, or whatever you do, you have this type of idea in mind. And I learned to respect price long ago when I see things happen, when leading up from my career, when I was actually filling orders and trading from 93 to 97, tremendous time in the stock market to rally. And the point is that when the tech boom and the bubble busted in 9/11 and 2000, 2001, the S&P and the Dow, the S&P corrected a perfect 50% correction. It was at about a 14 or 1500 high. The market came down to about 750. And if you're a believer in the U.S., as you should be if you live here, because if you live in the U.S., you should be a believer in it, that, hey, when this market comes down to that 50% correction, you should have bullets in your gun to start playing some of the long side of the market. And it got down to about the 760 range during 9/11. We rallied all the way back up and made new highs. And then we get the 2007, 2008 credit crunch, the housing collapse, and we see those markets test that 50% again and start moving forward from that point, from a bigger term perspective. So the point is, and then you see some markets that struggle even to get on top of the range, where you see the Nikkei got up to 40,000, and half its value. It's basically from 0 to 40,000, 20,000 is half its value, and it has struggled. It's butt heads with 20,000, butt heads with 15,000 for years, and can't get on top of it. And that's given you a sense of putting fundamentals together with a timing mechanism or a technical idea to help give you a thought of bullishness or bearishness, so to speak, and give you a thought. And this is what helps me say, who's winning? What side would I want to play on? If it's set up to be bullish and my overall idea is bearish, stay away. Look for a market that's set up in the ideas that you want. So another idea that I look to is on my halfway back, I put a green line on my chart. That just signifies it's a color visual thing for me. And then I also have a closing price where I know that just having one indicator or one idea isn't always enough. I need a second opinion. It's just like if the doctor gives us bad news, we're not going to take his word face value. We're going to go and get another opinion. And the point is that I look to where traders agree upon. And I knew this from the trading floor when I first stepped on that trading floor and I started watching Solomon. They were called Plaza, but Solomon Smith Barney is where they became to and where they're at from here and now. But the guy who was on that floor for about 20 years before I even got onto the floor, at the end of every session, he was always yelling at me, Mike, where did the bonds go out? Where did they go out? Where did they go out? And then as you learn as a trader, you know that all your open positions are marked to the closing price. And you start to see that all technical indicators generally that you might look to a Bollinger Bands or a MACD, or you might look to a stochastic. You might look to an RSI to give you some influence or to build your bias on if the market's overcooked or undercooked. But all those strategies need the closing price. They need the finishing price of whatever time chart you're looking at to build your ideas from. So the point is when I read about authors or I asked questions of students of mine, is I wouldn't just sit there and go where they disagree. I want to know where the mindset of the masses is, where the majority of people are. And if you guys are not day traders, which I heard that about this audience, is that you're not. But the point is that knowing something about the mentality of day traders or people who trade maybe once a day or trade multiple up to many times a day, I know what type of time frames they're looking at. I've polled people since I've built a pit trading class to now a screen trading class for people, and I've asked questions of my colleagues, my friends, and of myself, is that I know those day traders are looking at anywhere from a 1-minute to a 30-minute chart. That's where the majority of them sit. So I know from there, and I know that they have anywhere from a minute to about a 2-hour time tolerance before they get impatient about an idea. So I know that about them. I know my audience, so I'll start to set my oscillators within that. And because we are an instant gratification world, we go to movies, it only lasts about 2 hours. We go to dinner, it only lasts about 2 hours. We go to parties, we might start getting tired after a couple hours and look to do something different. But from that point, you get an idea of your audience. Always ask questions of your friends, of your mentors, of the people around you. Just get a feel for it. You don't need an exact recipe, but get a feel for where everybody lies. And then you know or have a feeling when they're sitting into a point of vulnerability or they're sitting into a place of strength. And then you know if you want to get on board or adjust your position accordingly. So the halfway back of the current day and the previous closing price will fuel my idea and my thought on whether it's in agreement with my fundamental thought of the direction where I think the market's going to go. And I'll play from that side. And I also know that people, even like a weatherman, won't give a forecast more than a week out. Why should I? I mean, I don't trust myself out more than a week anyway. And that's where the majority of people's memory begins to lapse. We might be able to remember what we ate for dinner Monday, Tuesday, Wednesday, Thursday, Friday, but when you start moving out beyond that week, it gets a little fuzzy, and then it shifts into long-term mode, and you might start going into monthly data or yearly data in your head, or go to yearly halfway backs or historical halfway backs. And that's how we feel when we graduate from college 20 years ago, and all of a sudden we're starting to think, man, it felt like that was yesterday. Well, it wasn't. It was 20 years ago, but our mind goes into long-term memory mode. So the point is that you figure out where you're at, and for me, this previous closing price and the halfway back of the day gives me a sense of who's winning today and gives me a sense of where I want to possibly go, and is that in agreement with what I want. And along that scale, that I have those turning points where I have that neutral line, I consider that a red line. That's like my 50-yard line in football. And I project 4 waves up or 4 waves down in a day. But what I'm interested in is that when the market flips from downtrends to uptrends, is it on the right side of my neutral point? Is it on the right side of my halfway back? And is it on the right side of my fundamentals? And the team that I'm teaming up with when I get long the market, that I want to have them, I want them to be in a good mood. I want them because they're the ones that are going to make me the money. They're the ones that are going to push this market in the direction I want them to go to. So the point is that when my setup occurs, what's the mood of my teammates and what's the mood of my opponent? And when the point is that when I know that if the market starts moving above neutral, the sellers are getting meaner and nastier the higher we go. And I know the buyer's mood when we're moving above neutral is getting normal to interested to crush and to want to exalt and dance in the end zone type of thought. And it is like that snowball effect in how fast the market may move from there. But it's a point, and it's just giving me a point of where things are matched up and where things are in alignment. So here's a chart. This was the Euro-US dollar chart on Friday. And this is a few things that I go through and when I'm analyzing a market, because I don't want to join a party when the party's almost over, when it's up at a high, and jump in on a long position when it's up towards the high. And I feel like I'm jumping in when the party's already happened, or jump in on a short position on the market when it's towards its low. And so I have the benefit in the U.S. session to know some things about the 24-hour session already, because for me, this chart's 15-minute chart, and the new day starts at 1400 for me, 2 p.m. Pacific. It's 5 p.m. Eastern, where that's the currency clock, where a new day begins. And the point is I know a few things about the market. I know where it closed, and I know where yesterday's halfway back was. But the point is as we go along the time horizon and we start to get into it, the right side of this chart where it says 545 at the bottom, 5:45 a.m., that's kind of when the U.S. session is all gearing up to go. I know where the high's been in the day, and at the point, it was just before 5:45, that high where it circled there was the high. Earlier on in the London session, the market hit the low around 2 o'clock in the morning, 2:15 my time. I knew where my halfway back was. It was coming between 136.08 and 135.80. The euro is a more valuable currency in a huge, big historical picture, and overall it might be, it's bullish in that sense, and that may be something that will bail you out in the long run. But the point is I don't trust my historical thoughts, because those are, sometimes going over 20 years, and people can't even remember outside of a week. So the point from there is I know when I first got involved or sat down to look at the market, I knew what happened in Asia. I knew what happened in London. I knew where my halfway back was on the week, somewhere down towards 135.24. So I knew things were bullish coming into the market according to where the market closed at 136.08. I had my 4-level upside target, 137.20. I had my 4-level downside target, 134.96. I knew what a perfect bull day would look like. I knew what a perfect bear day would look like from that point, and have my ideas of where I think things can go. In between my red and green line, it's mixed. So these are all thoughts that are going through my head. Euro's bullish. The market's on the top half of the range. I want bullish, but I want to wait for a pullback towards my red and green line and wait for the market to show me some support, flip from a downtrend to an uptrend, and be on the proper side of the green and red. So that's my initial evaluation. I'm looking at things, judging things, checking out. And I go to the next slide, and the market on this 15-minute chart around 6:15, 6:30 in the morning flipped from a downtrend to an uptrend, and it was on the proper side of the green and red, and that's the blue arrow of the market. Okay, so this is the thing. This is your moment. You decide to get involved in the market. You decide to go. Now you get in there, and maybe you have your time horizon, and it might be a minute, it might be an hour, it might be 2 hours, it might be a day, it might be a week, month, year. Wherever you're at in this, you've got your moment. And now it's evaluating, this is the execution moment. Now, how's it going? What's the result of things? Is it working out, and is it to your benefit? And you can see what the market did beyond there. When it starts going your way and the market's doing the things that you want it to do, breathe. Breathe, because everybody holds their breath and hangs on to their losers. We know that that's the easy thing to do. But you have to teach yourself to breathe and do those things on the points when it's going your way as well, too. And you have to learn to breathe throughout all things. And if things are going good, try to shoot for the market to hit your objective. But if things are giving you some punishment and falling below your red and green line type of idea, get out. Start over. Start fresh. Let the market do some more things. I had the market, I was short the New Zealand dollar. It was taking longer than I thought it would, but I was short it. It went the way it wanted to go today. It had its pullback that I was looking for, flipped from an uptrend to a downtrend, and I was able to get short the market on New Zealand. I knew there's bad news out there anyway, you know, and it's like-minded with the Aussie and those types of things, and it's been stronger for the U.S. dollar today. So the point is where were things set up? Where did the pullback happen? And then this blue arrow on this chart that I'm referencing, flipping from a downtrend to an uptrend, you can look at your oscillators that you might look to give it an additional rule or an additional type of thought. But I like to respect price and what it's doing. It always tells me who's winning, and it always tells me who's losing, and it always tells me how fast it wants to move. And generally when it moves fast, something happened. Respect that price. Shift your idea, adjust it to where you're comfortable or you have a tolerance set up, and then ask questions, and then look for the reasons why. But by the time you're elbowing the person and looking for that news and the reason why, it's costing you dollars and priceless dollars along the way. So it just gives me a point to give a very 10 out of 10 idea of I know what I want, I see what I want, then going after what you want, and then judging how's it going, and dealing with the time horizon that you want to work with the trade. My time horizon and time tolerance, I shifted it because I start to get uncomfortable in a trade after an hour to 2 hours into a trade. That's me. That's my personality. And the point is I know all the day traders that I compete with, that's their time tolerance. So I've matched myself within there. But I want to time the idea as best I can, and it show me that it's bullish. And when it flips from a downtrend to an uptrend, where does that come in conjunction with my red and green line? Is it still on the top side? Yes, it was in this euro, so it is a point of taking on that trade and going after it. Today being short the New Zealand dollar, it flipped from an uptrend to a downtrend after the distance I wanted it to run up, showed some overhead resistance, red line, green line clearly above my head today, and then the market taking an hour, 2 hours, 3 hours to hit and retest that low. So you could pull up a New Zealand chart in the 15-minute, and you could see what it did in the U.S. session and where it found some overhead resistance and put on the red line and green line. And then show that from a shorter time perspective and then adjust it to what you look at and what your time horizon is. And it gets to that point because not only as a trader but as an educator, it's important for your educator or your mentor to listen to you and what you want out of the trade, where your tolerances lie. And that's where I'm always asking people, give me a rating from 0 to 10. What does this feel like to you? What is the command of your fundamental ideas of unemployment, of the interest rates, and of the things that move your market? And then what's price telling you? Well, how far does the market move? What is my proper risk tolerance? What's my proper contract size to trade on this? Do I want to risk 1% of my account, or do I want to risk 5%, or do I want to risk 10 or 50 or 100? I don't risk more than 1.25% of my account on an idea. That rule has nothing to do with the markets. I just don't want to lose more than that on an idea. And the point is if it hits that point, I'm going to get out and start again because something was off. Maybe I was in too early, in too late. But I want to be able to come back and play tomorrow. And that becomes the point of where I want to be.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.